Alright, welcome back to MMGinvest. So, today, mainstream media is starting to sound a lot like me 6 months ago. um, a lot of recession talks, the yield curve has fully inverted now. Nobody listening to me should be surprised whatsoever. It's ironic because yesterday I posted Wall Street waking up quickly, and yeah, today they really woke up. 800-point drop on the Dow. You know, it's getting ugly out there, and gold, silver had a dip 2 days ago or yesterday, popped right back up. The trade talks, I mean, it's nonstop every day. Trump comes out, trade talks are good. We don't need a trade deal. Like it's gone to shit. I mean, China and the U.S. are in full blown economic warfare. Although Trump is starting to uh, the market. I wouldn't say the market's reacting to the tariff war all that much. It's just that the bubble has ran its course and the Fed is trapped, and all central banks are printing around the world, and Wall Street and everyone's sort of waking up to the fact that the yield curve is inverting, and the Fed couldn't normalize interest rates. That's what it really is. It's not really the tariff war, although it adds a little bit to it, right? Economic warfare, it's bad for both. But I think this is necessary. Trump had to do something, right? Because as long as you have a trade deficit, I mean, the country's just going to get gutted and collapse anyway. All right, what else? I was saying that the tech giants, the revenue, their earnings reports coming out next quarter and 2020, I think they're going to be really bad. For one, there's regulators are talking about the fact that they're monopolies and they're censoring people, right? Also, Europe is doing the same thing, and these companies, they're not acting like private companies anymore. They're acting like governments or something. They're trying to sway elections around the world. They want globalism. That's why, and they're gonna fail at that. And their stocks and their shares are gonna eventually start dropping by a lot, and they're gonna become not profitable. I mean, Amazon isn't even profitable. Google is very profitable. Facebook not really profitable. Apple, I mean, there's no innovation at Apple. And they screw their own customers the way Apple tries to get their customers on the App Store, this and that. They don't provide you with like headphones, this and that. Samsung's way better. They've already the innovation at Samsung's already better than Apple at this point. So what I'm trying to say is these FANGs, right? These major tech giants, once they start faltering, they're going to take down the entire stock market with them. Because there's way too much money propping way too much capital in these tech giants, okay? And their PE ratios through the roof. They're priced for like 10 years into the future at perfection. The only way is back down, and with all these index funds like Ray Dalio's, right? There's way too much money in them, and all these retail investors and their index funds and pensions and the boomers, all their retirements wrapped up in these tech giants that are pretty much gonna. I don't know if they'll go bankrupt, but they're worth maybe 10% of what. Well, I wouldn't say 10%, but they're worth a lot less than what they're valued at today, valuations wise, hence P ratios. So let me get the disclaimer out of the way. This is not financial advice. I'm not your financial advisor. I'm not a licensed financial advisor. I'm just some guy ranting and raving. And these are just my opinions. I could be completely wrong. I'm not always going to be right. I have been wrong. With timing at least, not with fundamentals and everything. This is more of an educational channel, and listening to me rant and give you guys my opinion, consult your own financial advisor. All right. Go to my website, by the way, before time runs out. I need more money to buy more mining stocks, and you need, some information and data. Although it could be all wrong, but so far it's been working out. Stocks tumble more than 2%. Dow falls as much as it fell 800 points on recession fears. And stocks could close at lowest in more than 2 months. So, they're a little bit panicky right now on Wall Street. And, it's funny. Normally around this time of year, there isn't that much volatility. But right now, crazy amounts of volatility. And a lot of Wall Street's still on vacation. So if things get really ugly before everyone gets back from vacation, they're going to panic sell. But, it's going to be all up to the Fed. And, yeah. So the yield curve just inverted entirely. I posted this in the newsroom in the free chat groups. Links below this video. I also posted this on my Instagram. Why can't I see any of it? Alright, well... let's go back. So, this article came out today from Market Watch. Now, the reason the market's really tanking, besides, the global macro outlook that looks very green, especially with Europe, I'll look at charts, guys. We'll look at Europe's financials and banking sector. It looks bad. China as well looks very bad. And the U.S., here's the strategy. This is my game theory of what Trump is trying to do in the U.S. So the U.S. wants to be the best looking shirt in a hamper full of dirty shirts, right? In order to do that, this administration needs the Fed to keep cutting rates and to keep the U.S. stock market up while China is really falling apart, and so is Europe and a lot of emerging markets. And at the same time, they need a weaker dollar, but they don't want it to crash. They kind of need it just, kind of trading sideways, or preferably probably above 95 handle. While the stock market, the U.S. stock market, at least makes new all-time highs, melts up, or at least just goes sideways for the next year. There's two reasons for that. One is it's to suck up the global capital markets from failing Europe and Asia. And the second reason is so Trump could get reelected, right? And that's the game plan. But the Fed is like dragging their feet because the Fed needs to maintain this market psychology, right? The Fed wants the Wall Street to think that the Fed is in control. They don't really need to cut rates. They're just cutting rates for an insurance policy, and everything's going to be okay. Well, because of that last FOMC, which was hilariously horrible by Jerome Powell, I mean, he contradicted himself nonstop, and he looked like an idiot. I think the market realized these idiots, they're trapped. They can't do anything. They could lower rates, what? At the most 2.25 basis points, right? And then what? They have no more bullets in the chamber to keep the stock market elevated higher. Because the market's not that stupid. They know that this entire thing's a damn bubble. So does the Fed. It's like a game they play. and they pretend, and maybe they drink their own Kool-Aid sometimes, but now, the Kool-Aid's not working anymore. Either way, it's all about the retail investors not panicking. Your boomers. If they start pulling their retirement out of index funds and all that, I mean, shit is going to hit the fan. So, what are they going to do? I mean, the next FOMC meeting in September, honestly, Jackson Hole, I'm not sure when that's happening. I think it's happening next week. It's like when they get together and they do their little dinner parties and make some speeches. Jerome Powell's going to have to come out and be extremely dovish. So we're going to have to watch the Jackson Hole thing. Also, they're going to come out with they're going to say something this week before the markets close Friday, right? For the weekend. Because markets tend to sell off before the week. Like, no one wants to hold over the weekend, especially when things are, people are panicking. So, they're going to come out with something very dovish this week, probably tomorrow. They're going to say something, put out some article or something, and make an announcement. And then next week, the week after that, the Jackson Hole thing, they're going to hint towards huge rate cuts. And the question is, this is what you have to think. If they cut 50 basis points or more, I think they'll cut 50. If they cut anything more, it's too obvious that the market and the economy is going into recession. So they'll just cut 50 basis points and they'll just, shift the blame towards the world. And if they do that and the market, sort of just bounces, has somewhat of a relief rally, but then keeps dropping into the fourth quarter before Christmas and all that, the big shopping season. I mean, they're going to have to go to zero by the end of this year. And it's kind of, they're damned if they do and they're damned if they don't. And by the end of this year, if they cut to zero and the markets don't make all-time highs, it just keeps kind of going sideways, slightly down. We're going to have that. I think we'll have early 2020 that, the kind of like a 2008 crash, right? Some sort of like 30% drop, or I don't know. And then they're going to come out, and then they're going to do QE. And I don't know if QE will work. Let's hope it does. Just to buy a little more time. It's going to be interesting. Also, the tariff war, it's going to hurt Christmas sales, and Trump is trying to play it off like, well, it's not going to hurt it. Yeah, it is, because cost of everything in the stores is just going to go up because everything's made by China. So it's kind of like you can't have your cake and eat it too. And this does, although, play into what probably Trump wants. So Trump's thinking, well, if the markets crash now, the Fed will do what I want. They'll cut to zero and then start up QE, and it'll keep the markets artificially up until the end of 2020, which is a huge bet. Nobody knows if it'll actually work. It probably will for the short term. Will it work throughout 2020? I don't know. You do have Warren, the Indian, running on the lefty side. Who's probably going to go up against Trump. I mean, he'll destroy her in debates, but it's like she listens to me and all the other, like Peter Schiff and all the other, bears out there. And this proves that, these politicians aren't that stupid. They know what's coming. So she is going to be right during the debates, though. Like, you're printing money, this and that. And it's funny because Trump was saying the same thing when he was running in 2016. So It would be funny if Trump lost and the markets in the QE didn't work and the markets just tanked. And then we got a lefty in the office who's going to do like MMT, modern monetary theory, which is essentially helicopter dropping money. It's like helicopters just dropping cash. And it's a fancy way of saying we're just going to print, and we're going to have massive welfare injections from Main Street for the populace. So everyone might get a check, right? Every month or something. And guys, what does this sound like? Well, before the Roman Empire imploded, what they did was give everyone free bread in the cities. And that just ran up deficits and debt, and, eventually everyone starved and the empire imploded. So I'm going to make a sweet mini documentary talking about that. Nothing that's happening today is anything new. It's nothing new. Nothing new. Nothing is new. You guys are going to see that. And it'll be a sweet documentary. What else? I would rather buy... Okay. So, I posted this on my Instagram. You guys could go look at that. The yield curve. It was by Zero Hedge and Bloomberg. Larry Summers. They rolled him out. This guy is such a... He's just evil. Alright. So, Trump is already... So, here's the game. Here's the blame game. Trump's blaming everything on the Fed because they wouldn't lower interest rates. He's kind of right. So the stock market and Trump is literally dictating to the central bankers, which is hilarious because it's supposed to be the other way around. The central bankers are supposed to manipulate the stock market. And you could tell that they've lost complete control now. And the tail's wagging the dog. And the stock market and Trump is literally controlling the Fed. And, well, the Fed is trying not to do what the stock market wants and what Trump wants. But it's hilarious. It's too late. Because this is kind of vindicating that Trump was right. And so was the stock market, that they needed to lower rates even more. And Powell is trying to fight it, but the Fed is going to capitulate like tomorrow. If the stock market falls any further, we're going to go into charts in a minute. So yeah, I'll go into charts. China buying more gold. All right. Let's go into some charts, and then I'll end it with some more news. Oh, check this out. I posted this in the free room. I don't even want to talk about it. The algos pick up certain words you say. But there's recordings of like crazy stuff and how he made money on Wall Street. Let's get to some charts. Gold, real quick. I'm just buying every dip. Every dip. It's still, gold's back up at 1530. Silver broke above $17. It's extremely bullish. You don't want to miss out on this this bull market. It'll be the worst. I believe this is the biggest trade in our lifetimes. Buying precious metals, not just physical, but the stocks. And if you miss out on that, I don't know what to tell you. Go to my website, MMGinvest.com. Look for the gold line and watch that video. That's what to expect, and then you decide. Alright, so just looking at this, the dollar did rally. It's at 97.8, which is, fear. It's the knee-jerk reaction fear trade. Just sell everything, go into cash. I'll talk about the treasury yield. This is nuts. 10-year fell to 1.58. Let's take a look at the S&P 500 real quick. So, where's my moving averages? Here's the 50 and the 100. All right. So the S&P on the daily hit 28. 40. It's breaking through the 100-day moving average right now. Pretty soon, down at around 2750 is the 200-day moving average. The S&P is holding up better than the Dow. The Dow just looks bad. Let's take a look at the Dow real quick. The Dow did slice through the 200-day moving average, and we have the moving averages rolling over, and they're going to have death crosses, which is really, really bad on the daily here. There's some support at 24,800, a little bit higher as well, at 2,500. But this looks interesting. Let's go to the weekly. So remember my my Dow theory and the broadening top? I'll talk about the Dow theory in a second. Let's look at broadening top. So images. Here we go. Here's a broadening top. Why is this so small? And let's see if this is what's playing out right now. I haven't even looked myself. No, this is Dow Trent. Here's Dow. I don't know. 1, 2, 3, 4, 5. And I'm not doing Elliott wave. I hate Elliott wave. Boom. So if the price could fall and make a new low on the Dow Jones, which will be 21,700, if it goes below that, that's called a broadening top, and then it's game over. The top's in, and the stock market's it's done. Now we're far from that. We're still pretty far from that. I'm just giving you a warning, right? Now, if the Fed cuts to 0, you know, we could easily get a huge bounce and a rebound. That could be anywhere, right? That could be over here. And we might make new highs. We might not. We might just bounce and then go lower. Who knows? If they do QE, maybe we'll make new highs, have a stock market melt up. I don't know. Either way, I'm just giving you scenarios, right? All right, so that's that. I say we take this day by day. I still think there's a little more downside, but the plunge protection team might come in overnight or tomorrow. I suspect they will at some point soon. Because on the Dow Jones, the problem is if these moving averages roll over, that could easily give us this broadening top. So, you see these moving averages? This one, this one, this one, this one. If these start rolling over and crossing, we're going to get a broadening top. And they'll put in the top. And I don't even know if QE or whatever could get the market back up. So they don't want to see that happen. So, yeah, I mean, let's just wait and see. They'll probably, I think at 25,000 Dow, the plunge protection team will come in, and so will the Fed. The Fed will say something like, all right, we're going to cut rates in a massive way, and that'll stop the bleeding for the short term. Short term, remember? All right. Let's take a look at Europe. Europe's really interesting. Here's the Europe financials. I mean, this looks bad. The banking sector in Europe is just imploding. I mean, we know Deutsche Bank's like going under, so this is bad, very bad. And I expect maybe a bounce or something, but Europe, like I said, guys, the U.S. wants to be the safe haven for the world when it comes to capital flight and all that. Here's the other European indexes, their equities. I mean, they don't look anything like the U.S. They're not as high. The FTSE Euro Top 100 it's getting slammed. Once that revisits 2600, I mean, it's just they're gonna go into a full blown like recession, depression, and they're not that far off from that, because once it tests the support, the more the support is tested, the more likelihood it's gonna break, and they're not too far off from testing support again. Same with the rest of the indices in Europe. So Europe, I believe it's going to go quicker than the U.S. or anything else. Maybe even China. Here's the Dow transports. Transports your freights, trains, all the shipping for all the goods sold, yeah, it's coming up on support again at 9,700. The more it tests it, the more likelihood it's going to break below it again, and that's not good. So transports are showing weakness in the overall economy for the U.S. So is the Russell 2000. Russell 2000's 2,000 smaller companies. And these are a way better barometer than S&P 500 or the NASDAQ or any rest of those other ones, because those are more like speculative, and every retail investor has them in their retirement, and it's a bunch of tech giants who the market does not want to let drop, right? If you want to be a conspiracy theorist and think, banks and the Fed's buying stocks behind the scenes, they would be buying indexes. They wouldn't be buying the smaller companies, the 2,000 smaller companies in the U.S. And these are where where managed hedge funds buy, not index funds. So this is more of a real market, I would per se, that really represents the domestic for the U.S., right? So it's on support again. If the Russell breaks below 1,500, there's way more downside for the rest of the U.S. markets. So I would watch that. All right. Gold and silver. Silver above 17. What did I tell you guys? As soon as gold gets above $17 an ounce, it's game over. Bull market, full blown. And listen, the gold to silver ratio is still like above 80. Well, as that ratio does the opposite of widening, it comes closer, right? Comes together, broadens. Silver is gonna like shoot straight up. Like it could be at $30 a month from now, and your stocks and ETFs are gonna explode. That's why I bought into this silver ETF, leveraged, and I'm gonna ride this sucker up. So that's all I have for that, pretty much. Gold is gonna stay pretty solid here. Let's take a look at gold real quick on the daily. Gold looks strong, guys. I mean, it's the fundamentals of the Fed having to cut rates to zero, and eventually probably going to print. I guarantee you that the Fed's going to be printing money, doing QE by the end of 2020. The only question is, will they go to zero by year's end 2019? That's basically it, guys. And remember, I called it. I am the only guy out there on YouTube publicly who called the breakout in the gold and silver bull market. And I'm not a stop clock like the rest of them. I'm the only one who called it out as an actual speculator and trader, which is awesome. I'll never get credit, you know, and that's fine. I don't want to be, I do not want to be known. I don't care about fame. I just want to make enough money to buy like a farming compound so I could be self-sustained as the world burns. That's really all I care about, guys. I don't want a Lambo. I want a tractor. Alright, in a garage where I could weld and make things. Alright, so it's pretty much what I have for now. I'll look at Bitcoin. Bitcoin tanked. And I warned the guys in the private member. I said once it falls below 11,100, it's gonna go down in a big way, major correction, and that's exactly what happened. Tether volume has been falling. It's sort of rising right now. So you know, I don't care. I'm just short. There might be a little bit of a bounce, dead cat bounce on the 4 hourly. That's what I'm looking at right now. And there's another opportunity to short it again if it does. So it's extremely sold on the 4 hour. And you might get a little bit of a bounce back up. I'm not sure how high. It's going to start running into resistance already at 10,500. So I doubt the price will get back above 11,300. I doubt it'll get back above that. So I'd watch for a bounce on Bitcoin. But then it's going to go lower, I think. Because looking at the weekly chart, I warned you guys in my last few videos, this is what's going to happen. If you look at the MACD, it's about to cross. Huge death cross on the MACD. Or a divergence. And, yeah, in the OBV as well. So, it's going to go down. Unless 6,000 is, we're going to 6,000 for sure. If 6,000 breaks, which is very possible, and I think that's going to happen because, listen, you know, I'm going to make a separate video. That's just where I leave it. For now, the regulators are just going to keep going after crypto. I'm telling you. What else? All right, let's look at some news. I'll post this. Rickards thinks that China's a paper tiger, which I agree. You know, I think China might be the next superpower, but at the same time, it might not. It just, the whole world's just going to be like third world or something. So, because China has a bigger bubble than the US when it comes to commercial real estate. So, and that's just that. There's no freedom in China. Freedom directly correlates with prosperity. It's that simple. So, I'm going to leave it at that. You know what's not in the news? France. It's still happening in France. Hong Kong is pretty much getting invaded by China. And these types of civil unrest and whatnot is going to continue. All right? It just is. And it's going to happen in the U.S. as well. So, especially as the election season ramps up. All right? Smash them likes. Leave anything in the comment section. And please share my videos. It's the only way my channel grows. And visit my website. Until next time.